Okay, it's pretty clear that things are totally upside down right now. Hold on, I'm upside down. Let's fix that. All right, here I am. Real estate experts shred the Biden rule, punishing home buyers with good credit. That's total madness. I couldn't agree more with this statement. I have had bad credit. I did start at the bottom to work my way up into the housing world. First jobs, first homes, first rentals, first apartments, first everything. You have to start somewhere and you have to work up from there. Spreading this kind of madness is really the best word for it, just doesn't seem to make sense. Let me know down in the comments, do you think that this new rule punishing good credit borrowers to help low credit borrowers buy homes when maybe they shouldn't be? Is this a good thing? Do you think it's a good thing? Do you think that adding $40 to $100 a month onto your loan for somebody else is a good thing, or should they be building their credit on their own? So when you're looking at these articles, it's kind of insane thinking about, it's clear that, at all levels of the media, they're just not digging this new rule. It doesn't matter which news outlet, left or right, spreading this kind of nonsense makes no real sense. So let's take a moment and let's look at our Phoenix housing market and see where we've come up in the last week, and has this impacted us? Obviously, the actual rule doesn't go into effect until May 1st, but let's see what's going on. So we're going to start by looking at the monthly average sales price per square foot. This is a lagging indicator because this is a sale that has already occurred. But this is also a number that a lot of people would look at and say, oh, well, this is what's happening in the market. So we're going to see here that we had our peak, and we've talked about this multiple times, back in May of 22. Yep, we know we peaked, it's crashed, it's fallen, it's jumped, it's swam down to the bottom, it's doing all of those things. And it did that all the way up until about December, January. And at this point, we're up to $285 a square foot average. This has come up quite a bit, and when you look across here, this puts us about in line with where we were in February of 22. So we're already starting to erase some of those losses, and this should say something a lot about what the buyers are feeling. Now, one of the indicators that buyers use as to whether or not they should or shouldn't be entering into a market is whether it's going up or going down and how much it's going to cost them, or the affordability. One way that plays into affordability is interest rates. So let's take a quick look at what the 30-year rate has done just in the month of April. So you can see here what we're looking at is the 30-year fixed rate mortgages on Mortgage News Daily. You can use whatever site you want to look at what the averages are for interest rates. This is just the one I use. And you can see that we've got basically a drunk sailor here.
Are you drunk?
All month long, this is just the month of April, we've been all over the place. Now, there are a lot of factors that influence mortgage rates, and you really should talk to your lender about what those are up front. They're going to be the most versed in this. I'm just looking at this because this is telling me a lot of what I expect buyers to be doing. And when they see just last week at 6.75 versus today at 6.5, that's a pretty big buy indicator. People are going to feel a little bit of FOMO, like, if I don't get back into this, those rates might go back up. In fact, they were up higher just earlier in the month multiple times. So what else could you be looking at? You could be looking at all the changes that have occurred with the FHA loan limits and loan premiums. The FHA loan limit was increased to $530,150 this year. The insurance premium was reduced. They have typically lower interest rates at this point than a conventional rate. And if you can get the seller to pay for some of your closing costs, which we'll talk about here in a moment, you can use up to 6% of the sales price towards your closing costs, which means you can buy down some of that insurance premium, some of your rate, any number of different things. So always bear in mind that you're working with two people that are really need to be close to the situation when you're looking at homes, and that's your realtor and your mortgage agent or broker, depending on who you use, and they should be guiding you through this process and giving you lots of options and making sure to ask you questions about what's going to fit your specific needs. Let's continue on into the data and look at where listings are at and talk about sellers here for just a minute. So one of the indicators that we look to see what sellers are thinking would be the new listings. So these aren't just the total number of listings in the MLS, but these are the new listings that are jumping in on a daily basis. This tells us what sellers are feeling, and we're sitting at a 23-year low for the number of homes coming into our market. And that's indicated here by this orange line at the bottom of everybody else. And you can see we're only looking up to the end of April right now. We don't have data for the rest of the year, and we're well below what's happened in the last 4 years. Here's 2019, get our graph to update, 2018, 2017. You can tell this isn't a pretty picture. Not a lot of sellers are coming into the market. For obvious reasons, affordability is crazy right now. And because the market did dip, a lot of people are asking, or at least have asked, how long should I wait before the market comes back? Ultimately, that's not something that we can tell, but we can see about 2 to 3 months what's going to happen with pretty certain data, which is why we're looking at all of this information as a composite and not just one or the other. When you look at some of these YouTube videos out there where people are picking one piece of data and saying it's all falling apart.
Cherry picking what happened today.
Well, that's not the full picture. Let's continue on looking at the total active listings to see what that full picture is. But before we can talk about the active listings, I have to ask a big favor. 99.9999999% of you are either not subscribed or new to the channel. It would be super helpful if you were interested in this information and you wanted further updates in the future to hit that subscribe button. If you don't want any more and you like this video, hit the like button. If you don't like it, hit the dislike button twice. It'll really help. Let's look at active listings on a weekly count. And what we're seeing here, we've been talking about all year long. The pink line is just going down. That's right, it hasn't been climbing. Normally, well, I guess these last 3 years you can't call normal. Let's throw 2019 in there and see what normal would have looked like. We'd see that spring pickup right at the beginning of the year. Obviously, that's not quite spring yet. And then we'd peak out somewhere around February or March, and then we'd start to dip off throughout the year. So we're in a normal trend dipping off right now, but this is quite a bit lower than what we should expect at this point, which is part of why we've seen all of the downward pressure on pricing go away. Are there still prices coming down to some degree in some areas? Yes, but the overall market pressure isn't there, and the indicators aren't showing us that the market is going to continue to depreciate and push down. In fact, when we start to look at listings under contract, we can see that more buyers are coming out of the woodwork and jumping into the market, which is indicated here by the brown line, and we've seen a pretty staggering uptick in this last month. More buyers coming into the market means less downward pressure on prices. It also means that we're going to see fewer price reductions and fewer concessions because there aren't new listings coming in to satisfy that demand. And we're really starting to see that here in the ratio, or the sale price to list price ratio. Now this is buyers and sellers getting together, having a meeting of minds, closing on the house, and everybody moving on happy-go-lucky. Well, we're at about 97.5% of the sales price to list price. That means that there isn't as much negotiation as there once was down here at 96.5, but it's improving towards the seller's side. So buyers are coming into the market. Sellers aren't really coming into the market. What does that mean for the speed and the velocity of what's going on here in the Phoenix Metro? Well, we're looking at the Cromford Market Index, which is one of our indicators, and I'm using a lot of data here from the Cromford report because they do such a great job putting it together, and I'm thankful that they're at least in this market for us. They are a neutral third party that this is all they do. They aggregate data, they put it into pretty graphs, and they let us use it to see what is actually going on. And this pink line, this is our speed, our velocity, this is what's happening. When we're above 100, that means that we're at a seller's advantage. When we're below 100, we're at a buyer's advantage, market-wise at least speaking. And you can see all year long, we've been gradually coming up. When you look at the 3 years prior, those were kind of noodles markets. So let's look at 2019, which was a fairly balanced market. You can see we're right in line with where we were heading then. If we could keep this trajectory, we're going to see a lot more neutral and balance in the market, Will it be to a seller's advantage? Sure. But no buyer wants to buy in a market that's crashing. That's what we just saw the last 6 to 8 months as it was coming down. That's a terrible place to go, yeah, I think I want to buy that over there, and watch the price dump after I've bought it. No, not the way it works. So when we move on from our general index here, we're going to move into kind of this short-term graph. This shows from October to April, and it shows more the velocity of what's happened. In the last couple of weeks, we were at 140.7 on the 18th, and the week prior on the 11th, we were at, let's see right here, at 138.5. We're sitting at 143.3 right now, which is moving well into that positive territory because our supply is down at 57% of normal, and our demand is also down at 82%, but there's more demand still than the supply to fill that in. So let's wrap this all up. What does this mean, at least at this point, for the Phoenix housing market? Phoenix is back in a seller's market. Prices are coming up again, but we're not where we were in 21 or 22. This is looking a lot more like the market in 2015 and 2016. We currently have the 4th lowest count in under contract and the 3rd lowest count in 18 years for active listing count. So when you see all the headlines that the listings have gone up hundreds of percent, thousands of percent, millions of percent, whatever they want to call it, yes, listing count did go up. The number of available sellers went up significantly from where they were in 21 and 22. Nobody thinks those were normal markets though, so to compare against them would be silly. For the first-time home buyers, the stepping up buyers, people that might be using FHA, owner-occupant sales are moving back into the normal range, right around 75%. We're seeing fewer second and investor loan purchases. The FHA loan limit we talked about went up to $530K and change. The FHA average mortgage rate is still below conventional. FHA allows 6% in seller concessions versus 3% for conventional, and the mortgage insurance premium, or the one that you would pay on an FHA loan, is lower than it was in 2022. So why is supply declining so much? Insufficient new listings coming on the market. That's really what's pushing the supply down. All of the leading indicators currently tell us that our market is not crashing. Did it correct? Absolutely. Was 21 and 22 normal? Completely abnormal. This is not something we want to see, or should we see again. It's going to hurt the market if it continues to happen. Affordability will not be any better if prices go up at that rate. So don't expect downward pressure moving into the next couple of months. If you think differently, I'd love to hear your opinion. I see comments pretty regularly that are telling me the market's going to crash, it's going to implode. Tell me why you think that that's the case. Is it going to implode everywhere, or is it going to implode in certain areas? We do have portions of our city that have too many new construction homes coming in, so their little area is going to have an oversupply. Will it crash the market? Not currently, but let me know what you think in the comments. I'm always open for conversation. I will reply, and I look forward to seeing you in the next video. Have a good one.